Good morning and welcome to Alderan Resources Investor Webinar and Conference Call to provide an update on recent activities at the Detroit project in Utah, USA. All attendees are in listen mode only. If you would like to ask a question, please enter it in the Q&A panel within Zoom. I will now hand over to Alderan's Managing Director, Scott Caithness.
Thanks very much, Simon, and good morning, everyone. Look, I'm going to be giving an update on Alderan's exploration this morning. I'm going to be focusing on our key project, which is the Detroit Gold Project, and in particular, the exploration that we're doing around the Drum prospect. Our opening slide, it's just a photograph, a recent photograph of the Drum, one of the pits at the Drum gold mine. The reason I've got that as an opening slide is just to give people an indication of scale of these deposits. They were mined back in the mid-1980s, and I'll take you through the presentation. Interesting that when I visited the project area in December, we had the geologists that did the original exploration over the Drum mine, which is a gentleman there, Eric Lauer, you can see in the checked shirt pointing there. So he gave us a very good history of the exploration. He's had a very successful career. He's now retired, had a very successful career with Newmont in Nevada. So he was explaining all the work that was done around the Drum pits back in the mid-1980s. Just the usual disclaimer, which people can read at their leisure. Just in terms of highlights for the company, for Alderan, obviously all our projects are located in Utah and the USA. It's one of the best mining jurisdictions in the USA and one of the best in the world. Our flagship project is Detroit. It's a historical copper, gold and manganese mining district, and it's got outstanding gold and copper potential. We've actually, pre-Christmas, we completed a 6-hole drilling program on a number of copper and gold targets at Detroit, and we're still in the process of waiting final assays. COVID has impacted the time frame for analysis. We were originally expecting analysis to come back in about 8 weeks. We believe that that's blown out to in excess of 3 months now. At the moment, we have 10 drill holes planned at Drum, and that drilling program is in progress. Drum, it's got 125,000 ounces of historical production, and the deposit's open. There are historical assays down drill holes up to 38 grams. There's high-grade historical drill intersections. You know, an example, 23 meters at 5 grams per ton. And Alderan in-pit rock chip sampling has got assays up to 10 grams per ton, so sort of verifying some of the old grades. And I'll talk about the results of the first drill hole, some of the preliminary results that we've got. Also for Alderan, we've got a project pipeline. We have additional projects, which is the Frisco project, which people who've been long-standing shareholders will know was Alderan's original project when it IPO'd. That's currently joint ventured out to Kennecott Exploration, which is Rio Tinto. We've also got the Valley Crossroads project, which is a joint venture with Tamara. We've also got a partnership with Tamara around the Detroit area, and also the White Mountain epithermal gold project. All of our projects are located in Utah. So this shows the location of our projects. You can see Detroit there on the left-hand side picture, and also the Valley Crossroads, Frisco and White Mountain areas down towards Milford, further south. As I mentioned before, Utah is a tier 1 mining jurisdiction around the world. In 2020, it was ranked 4th in the Fraser Institute ranking of policy perception. There's great infrastructure. There's highly ranked copper and gold mining districts, both within Utah to the north of us with the Bingham Canyon porphyry region, and also in neighboring Nevada with both the Carlin Trend and also the Battle Mountain Trend. So we believe that Detroit has potential for Bingham, Carlin and Battle Mountain style deposits. Probably the one that where we see the best analogies at this point is Battle Mountain style deposits, where we've got copper and gold deposits. Drum, it's certainly one of Utah's most productive and economically significant historical gold producers. The picture on the right is just a summary geology plan. So you can see the Drum open pits down in the southeast corner of our tenement area. And then you can see the rest of the Detroit area. So Detroit, we've actually got an entire district under tenement at this particular point in time. So we're in a very, very strong position. You can see the intrusive, which is the basin porphyry, what's referred to as the basin porphyry area in the center there. And you can see that there's a number of historical old workings centered around that porphyry. There's actually over 30 old workings. So the ones that I've shown there are historically the more significant ones. The Mizpah deposit, you can see there, is something that Alderan has worked on a little bit. Back in 2020, we drilled a few holes, but I'll talk about that later on in the presentation. In terms of our progress at Detroit and exploration history, a couple of people have commented to me over time that our exploration has gone quite slowly. I don't actually believe that to be the case. We originally picked up a portion of the Detroit project in 2020 under an option arrangement. We then drilled a few drill holes at Mizpah. We drilled 7 holes. We confirmed and extended the mineralisation in October 2020. In February 2021, we completed a consolidation of the tenement. So back in April 2020, we only had a portion of the area, a relatively small portion. We spent a lot of time after the initial work consolidating the tenement and building our portfolio position. And really, we're still in the process of doing that. And Drum is our most recent acquisition, which we picked up only at the end of September last year. So since the consolidation, we've completed a lot of surface exploration, stream and rock and soil sampling, magnetics and IP geophysical surveys and petrography. We've also drilled 6 holes into the targets at Detroit, and we've secured Drum, and we've actually started drilling Drum since we acquired that in September. So we've actually been very, very busy. I'll talk a little bit about Drum now. Next few slides. Drum's gold potential. Drum was explored and mined in the mid-1980s. So mining ceased in 1989. And since then, there's been basically no exploration carried out. And what I've got is just an example of some of the drill intersections. And obviously these are the better ones that occurred at Drum in the mid-1980s in the exploration. So you can see, 13.7 meters at 6.4 grams, which includes, 4.6 at 18 from only 13 meters down the hole. 22 at 5, which included 9 at 10.8. The next one, YC174, is a hole that particularly interests me. 15 meters at 4.5, which includes 6 meters at 10.3. The main reason that interests me is that was drilled 150 meters down dip of the mineralization that was mined in the west pit. So it wasn't part of the mining operation in the mid-1980s. So historically, Drum produced 125,000 ounces at an average grade of around about 1.2 grams per tonne, and it was all oxide. So it was all near surface. As I mentioned, the mine closed in 1989. Alderan's carried out some in-pit rock sampling, basically to try and confirm the grades of the mineralization of what was left in the pit walls. And you can see some of those. Our grades go up to 10.7 grams per tonne. There's also 7 grams, 5 grams, but we collected around about 70 samples, and about half of those samples graded more than half a gram per tonne, and many of them graded greater than 1 gram per tonne. So we felt that very much verified and confirmed that there is still residual mineralization that was left behind in the old mining. And that was something that Eric Lower confirmed to us when he came and visited the project. Alderan, we have a 3-year option with annual option and exercise payments totaling $500,000. Our expenditure commitment is US $120,000, so that's within the $500,000. And there's a 2% NSR if we go ahead, so which we can purchase for an initial $400,000. We've already spent the $120,000, so we've already met our 3-year expenditure commitment. So basically, we've got 2.5 years to decide whether we want to exercise the option or not. The first thing we did with Drum after acquiring the option is we we basically modeled the historical drilling. So there are over 400 drill holes into Drum in the 1980s. The interesting thing about those drill holes is the average depth was less than 50 meters. So it's not drilled to great depth at all. The deposit is open to the north, to the south, and also down dip to the southeast. The East Pit ore is lower in the stratigraphic horizon. I'll show this in the next couple of slides, than the West Pit ore, and it hasn't been drilled below the West Pit. So the mineralization is dipping to the southeast and to the southwest, and it had the mineralization in the East Pit has not been drilled below the West Pit. As I mentioned before, there are assays to nearly 39 grams per ton. The longest intersection that we've seen in the drilling is basically 70 meters long at greater than 1 gram per ton. They only mined and they only evaluated the deposit for oxide ore. They didn't evaluate it for primary mineralization. So there's no deeper holes into the deposit. There's only a handful of holes that have gone as deep as 100 meters. Based on the historical and constrained by the historical drilling that was done there, we believe that there's exploration potential for residual mineralization, what we refer to as remnant mineralization. So the mineralization that was left behind at the end of mining of about somewhere between 40 and 60,000 ounces at a grade of between 1.1 and 1.4 grams per ton. That's constrained by the current drilling, but as I mentioned before, the deposit is open down dip to the southwest. It's also open to the south. And you can see on this slide with the picture, you can see that the mineralization down in the southwest corner, where that drill hole YC174 that I mentioned before, that got 15 meters at 4.5 grams per ton, you can see that that hasn't been mined. You can also see between the two pits, up in the northern side of the deposit, you can see that there's mineralization, residual mineralization between the two pits, again, that hasn't been mined. So basically we've been able to model the mineralization. I'll show it in the sections as we come through. So I'm going to show you a series of sections. The first one is the long section, A through to A prime, and the other two are the two cross sections, B prime and C cross sections. So the long section through the deposit, you can see that the stratigraphy is gently dipping to the southwest. You can also see where we've modeled the mineralization. You can see the pit outlines, and you can see where the mineralization has been modeled beneath the historical pits and also down dip of the historical pits. As I mentioned before, YC174, that's about 150 meters away from where they mined mineralization in the past. You can see that the favorable host stratigraphies are generally the Chisholm Formation, which is in the pale green, and also the Tatau Formation, which is sort of the pinkish color. The Tatau Formation, which was the prime mineralized horizon in the East Pit, has not been drill tested below the West Pit, and it remains completely open down dip. You can also see that there's virtually no drilling between the West Pit and drill hole YC174. And again, that remains open as we go further down dip to the west. The section below, the bottom section, basically shows the modeled mineralization that's outside of the current pits, the historical pits. So you can see again where the mineralization goes, and you can see that there's quite significant amount of mineralization that we believe is remnant mineralization. In terms of the two cross sections, these are basically north-south cross sections. So you can see B prime. You can see that the mineralization extends below the pit on the southern side. And you can see there also that there's some quite significant intersections. Generally, the East Pit, the grade of the mineralization in the East Pit is a little bit lower than the grade of the mineralization in the West Pit. but the mineralized horizon tends to be a little bit thicker. So in the East Pit, I mentioned before, there's intersections up to 70 meters, but certainly there's plus 65 meter intersections in the East Pit. Generally in the West Pit, the intersections are up to around about 35 meters, but generally a little bit thinner than that overall. Generally, the higher grades are surrounded by a lower grade halo. For oxide mineralization in the US at the moment, for oxide deposits, and there are quite a number of them being mined throughout the US, the cutoff grade is anywhere between about 0.15 grams per ton and around about 0.2 to 0.3 grams per ton, anywhere in that range. These deposits are leached in a leach pad. So they're mined to very low grade. So it's a simple matter of digging them up, crushing them to a certain grind size, basically putting a leach solution on top and basically leaching the deposits and getting the liquor out the bottom and recovering the gold. So they are mined to very low grades, and all of the orange, the red and the purple and the sections and in the plans that I'm showing are basically potentially above the cutoff grade that you would mine a leached oxide deposit for. The cost of production for these deposits in the US at the moment, generally in the range of anywhere from $600 US an ounce through to around about $800 US an ounce. Obviously, it depends on the deposit, depends on a number of factors like stripping ratios, obviously grade of deposit, but with a cutoff grade, let's say ballpark 0.2 grams per ton. These deposits, the East Pit at Drum had an average grade of around about 1.1, 1.2, and the West Pit had an average grade of around about 1.7 grams per ton. So well above cutoff grade and very good grade for oxide deposits. The other point to note about this, and I'll talk about this as we go through the presentation, is we also have the Mizpah oxide gold deposit, which was evaluated by the same company as Drum at the same time as Drum was evaluated, remains as an unmined gold deposit that sits from surface. It's only 2 kilometers to the north. In terms of the work that Alderan's done, we've commenced the drilling program at Drum. The prime purpose of it initially, our initial work, is to verify the historical work that's been done so that we're certain we can rely on that. And from there, we will look at doing extension drilling to try and evaluate and delineate more mineralization. We've only got initial results back for the first hole in that program so far. So we're currently in progress on the second hole. COVID is having an impact on our drilling operations. At the moment, there's no relief crews available when we drill a drill hole. So our drilling is operating on a 20-day on, 10-day off roster at this particular point in time. So basically it's going a lot slower than what would normally be the case. So we're into the second hole at this stage at Drum. We expect to have that finished this week in the next couple of days. And then obviously we'll roll through the program. But the first hole, basically we intersected 16 meters at 1 gram from about 60 meters down the hole. That included 6.3 meters at 2.9 grams and also 1.5 meters at 5.6. You can see the section below, and basically you can see where that drill intersection was, drill hole 9 DD 22001. And we believe that was an excellent hole in terms of verifying the historical mineralization. The purpose of the verification holes and the targets of our verification holes is to drill through zones that we believe have residual mineralization that was left behind when the mining ceased. So you can see at the bottom of hole YC16 there, you can see the pit boundary. You can also see that it appears that there's significant mineralization that was intersected at the bottom of that hole. Our estimate was that there was somewhere between 10 and 20 meters of remnant mineralization. That hole overall graded 56 meters at 1.8 grams per ton. And you can see the neighboring holes. So DM44 The average grade was 1.1, 46 next to that. You can see the average grade was 0.9, DM47, 1.2 grams per tonne. So our intersection, 16 metres at just over 1 gram, is pretty consistent with what the other drill holes along that section line intersected. So we think it's a very encouraging intersection in terms of verifying the historical work that was done. We're obviously going to drill a few more holes to verify so that we're certain that we can rely on the old work, and then we'll look at drilling some holes that both verify and extend the mineralisation. So you can see the yellow holes on the slide, the picture on the left-hand side, are the proposed first priority holes. They're the holes that we're going to drill in this phase of work to both verify and extend the mineralisation. I'll move on to Mizpah. Mizpah, we've gone through a very, very similar exercise, and obviously we've had Mizpah for a little bit longer than we've had Drum. In Mizpah, historically, there's about 197 drill holes drilled, and like Drum, the deposit is open to the north, to the south, and also down dip. Mizpah, generally the intersections are thinner than at Drum, but that said, the average depth of holes at Mizpah is less than 30 metres. So it's basically, these intersections are from surface. So 7.6 metres at 2.3 grams, 10.7 metres at 1.9, 12.2, 1.7, 22.9 at 1 gram. As I say, those intersections are pretty much from surface. Mizpah was never drilled. As I mentioned before, the deposit is open to the northwest, to the southeast, and it's also down dip to the southwest. Alderan, actually, in its initial phase of drilling at Detroit back in 2020, we drilled a hole 350 metres to the northwest, which actually isn't shown on this plan. We intersected 83 metres at 0.41, which included 6.9 metres at nearly 2 grams. So again, I hark back to the comment that the cutoff grade for a lot of these oxide deposits that's currently being mined is around about 0.2 grams per tonne. So at 0.41, we've got 83 metres at 0.41. We've got a significant intersection that's well above cutoff grade for a leachable oxide gold deposit. The interesting thing about Mizpah is that there are a number of holes that ended in significant mineralisation. So over 20% of the holes that were drilled ended in greater than 0.5 gram per tonne, and 10% of the holes drilled ended in greater than 1 gram per tonne. And the highest grade for the end of a hole was 9.1 grams per tonne. And you can see that hole, it's MZ87 052, which intersected 22.8 metres at 1.14, and the last assay was 9.1 grams per tonne. Again, modelling of the deposit, which is constrained by the historical drilling, we feel that there's potential for somewhere between 40 and 100,000 ounces of gold using the historical cutoff range of 0.15 to 0.3. So 3 to 4 million tonnes at anywhere between 0.4 and 0.8 grams per tonne. Again, above the cutoff grade that you would use for oxide gold deposits. There is a hint in the drilling that there could be a deeper second mineralised horizon, but as I said, the drilling was only down to 30 metres, less than 30 metres. There's also, again, like Drum, the drilling basically stopped when it got out of oxide, so it's never been tested for primary mineralisation below the drilling. You can see on the slide some of the intersections that are there, some of the historical intersections, and in particular, I've emphasised what some of the last assays in some of the drill holes were. So if I go down on the right-hand side of the image, you can see there that your MZ080, hole number 80, 18 metres at 1 gram, just over 1 gram. Last assay was basically 1.5 grams per tonne. Just below that, MZ81, 15 metres at nearly 1.3 grams per tonne. Last assay, 1.27. So a lot of the holes ended in significant grade mineralisation. Just showing the two sections. we've got effectively, we've got a long section with AA prime, and we've also got a cross section with B drilling down dip. So again, the mineralization is open. It's a shallow oxide deposit from surface. There's a hint of a second mineralized horizon. And you can see just at the bottom, you can see the modeling. Obviously, the modeling brings into account some of the drill holes that are off section. So that's where the indication of the second mineralized horizon is. As I mentioned before, there are 20 holes at the project that ended in +1 gram per tonne with the last assay. There are intersections up to 60 metres thick in some of the drill holes. And as I mentioned before, there's potential for primary below the oxide, which hasn't been tested. You can see on the cross section BB that basically the mineralization is open down dip. So a very, very similar scenario exists at Mizpah to Drum. The difference between Mizpah and Drum, generally the grades are a little bit lower at Mizpah, and also the mineralization is from surface. It hasn't been mined historically. Just touching a little bit on the exploration that we did pre-Christmas. Our strategy in the Detroit area was to do some early stage exploration over the whole project area to determine what were the best prospects to go forward on. A lot of this work was done and was planned prior to us acquiring the option over the Drum mine. As I said, we only picked that up at the end of September. Our drilling started, I think, about 2 weeks after we actually secured the Drum option agreement. So obviously we had to do some work on Drum to evaluate what was going on there. We knew it was a high priority target for us from work that we'd seen in the past, open file information. It was a project area that we really wanted to pick up. And really it's part of the ongoing consolidation of the Detroit area. In terms of Detroit, we have drilled 6 holes, testing 4 copper and gold targets in December last year. They were basically a series of both magnetic targets, IP chargeability targets, with associated geochemistry. We had gold anomalies, gold in rock chip samples up to 25 grams per tonne. We have some of the assays back, but we don't have all of the assays. We also drilled the porphyry target, which was the basin main magnetic anomaly through the center of the basin porphyry complex. And again, we're awaiting the final results for those at the moment. So we have got some preliminary results for targets that were drilled at the Copperhead and also in the northern extension, and we got the assays for the southern anomaly. Look, the gold analysis for those has been generally of a low order. In terms of the basin main magnetic anomaly, we did identify chalcopyrite down the hole. We probably identified more molybdenum in terms of the visual analysis that's going that we saw of the drill holes. Certainly the rocks that we identified, they're altered porphyry. There's quite a bit of pyrite down the hole. So we're basically at the stage where we're just awaiting the assays to come back before we make any further decisions on what we're doing there. You can see, just to give a perspective, you can see on the slide to the right there, which is an outline of the chargeability anomaly that we got over the whole basin complex, which is indicating there's certainly a lot of pyrite mineralization or sulfide mineralization through the area. You can see where the Mizpah deposit is located, which is just on the margins of the basin porphyry complex there. So basically our exploration is continuing on the Drum and the Mizpah areas. In addition to that, I'll just touch very quickly on the Frisco project area and our other targets. Frisco, as people know, is farmed out to Kennecott Exploration. It's been farmed out since 2019, and they're basically exploring it for porphyry coppers. They're earning a 70% interest in the project area through expenditure of 30 million over a 10-year period. So the first phase is they have to spend $6 million to get to 55% by November 2023. They're definitely targeting porphyry coppers. They have drilled a few holes in the past into some targets that Alderan had looked at, which are copper-rich tourmaline breccias, the cactus breccia targets, where there's some good historical intersections, including ones done by Alderan. And you can see some of the grades there, 41 meters at 1.9% copper, 0.6 gram per ton gold. That was a Rio Tinto drill hole. 32 meters, 1.2.3. So that's an Alderan drill hole that was drilled prior to that. So there's some very interesting targets around there from an Alderan perspective, but obviously they're not porphyry coppers. So Rio's targeting the porphyries. Their last round of work was to do a very high quality drone aeromag survey. And the image you can see there is the results of that aeromag survey. Rio's modeled and interpreted that survey, and they came up with 3 additional magnetic low targets that they're looking at following up in the field. They also refined, obviously, the magnetic signatures and the models for the existing targets around Cactus, Accrington, and the area as a whole, the northern carbonates up there near the Mountain Queen mine as well. So Rio's program is to do field checking over these new targets that they've identified, with a view to making a decision on whether to go forward with drilling them sometime in the first half of this year. So that's where they're at with Frisco. They're working their way through those targets, working their way through the project area, and clearly have porphyry targets, porphyry copper targets as their main objective. Just a reminder, I guess, in terms of our other projects, we have two other project areas called Valley Crossroads and White Mountain. Look a little bit like Frisco and Drum. They are large-scale projects. They're almost district scale again. In terms of Valley Crossroads, there's strong potential for copper gold skarn deposits. You can see where there's historical mining through the center part of the area, which is the area that's not held, but is also held by our partner Tamra. And in the areas that we have, there's certainly potential for down dip extensions to those deposits. Alderan has completed aeromagnetics rock chip sampling, and we did do some drilling on the Black Rock prospect, which low order results out of that work. Our next step there is to reprocess and integrate all the exploration data and to identify targets for drill testing. In terms of White Mountain, we believe is a preserved epithermal system. There's a 5-kilometre zone of argillic, phyllic and silica alteration through the area. It's got all the classic signatures and attributes of an epithermal. There's sinter terraces have been identified, alunite cap, chalcedony blanket, historical sulfur mining. I think we've also got a little bit of elevated mercury in some of our rock chip samples. We've done ground magnetics and that rock chip sampling. And really our target is a high-grade epithermal gold-silver deposit associated with the major structure called the Brimstone Fault, which runs through the center of the project area. I'm sure most people are familiar with our team. We have a very, very experienced team of ex-major company people. Tom Eadie is our chairman. He's ex-Pasminco and has had a very successful career subsequent to working with Pasminco in the junior space. Peter Williams, ex-WMC, again, a very successful career in the junior space since leaving WMC. Bruno Hegner is our Vice President of Operations in the US. He's the former Managing Director of Rio Tinto Copper Projects Group and Vice President of Resolution Copper Company. And Matt O'Hara is our Company Secretary, who has significant experience as CFO and also Company Secretary for a number of junior companies in Western Australia. Myself, my background and experience is formative years with Rio Tinto. So the first 20 20 years of my career was with Rio Tinto, and subsequent to that, I've worked with Vedanta Exploration as their head of exploration in India, and also founded a company which is now listed as Acora Resources, which is looking for iron ore in Madagascar. Our operational team in the US is basically a team of ex-Newmont geologists, so very, very experienced in the region. They all have more than 30 years experience, so excellent background for the exploration that we're doing, both in terms of their US experience and also their experience in copper and gold targets. Just in terms of our corporate structure, where we are at the moment, share price is only 1.9 cents at the moment. Our market cap is only $8 million. So we're not expensive. Our cash balance as of the last quarter is 2.7 million Australian dollars. And we're carrying on with our exploration. Our drilling is underway. So just in terms of a summary to finish, our projects are located in a great jurisdiction. It's a leading mining jurisdiction. Utah is one of the best places in the world to be exploring, and certainly one of the best states in the US. At Detroit, we have first mover status effectively for modern exploration over consolidated porphyry, copper and gold district. We're midway through a drilling program. We've already tested multiple targets. We're waiting for assays, and we're drilling on the Drum Gold Mine, which has certainly, based on the first hole and based on our modeling, it's got remnant mineralisation that was left behind. That some of that mineralisation is very good grade. It's open down dip and along strike, and it hasn't been explored since 1989. So nobody's actually been there and done any modern exploration on Drum since 1989. We've got a very experienced technical team in the US with both Rio Tinto and Newmont veterans, and our market cap is $8 million. So again, a picture in the background of the East Pit at Drum Mine. So again, these pits are substantial. The corridor that they sit within at the moment is 600 meters long by about 400 meters wide. So it's very interesting targets and lots of potential. And that's where I'll end. Thank you very much.
Thanks, Scott. That was a great overview and exciting times ahead for Alderan. Just a reminder, if you'd like to ask a question, please enter it into the Q&A panel within the Zoom. I've got a couple here. There's been a fair few delays. I know you touched on it already, but can you shed any light on this, and do you expect this to improve?
Look, in terms of delays, the only things that we've had have tended to be COVID related or permitting related. So one of the issues that I'm getting used to in the US with permitting for drill holes is every individual drill hole has to be permitted. And the process for permitting is you identify the drill target, the drill site that you want to go to, and you submit that, and then the government notionally takes 30 days to approve. But in that process, they get archaeological investigations carried out. So archaeologists have to come out and inspect those sites, and that can take time. So probably our biggest frustration is permitting, and generally we're working off a realistic time frame of more like 60. So what happens then too is it means that if you're carrying out your drilling program and the results of that drill hole indicate that you want to go 30 meters to the right or 30 meters to the left of what you originally permitted, you've got to go back and seek an amendment to your permit, which generally will take you a minimum of another 30 days. So it's not a situation where you've got an area, you might turn around and say, well, okay, I've got 500 meters by 500 meters that I want to drill, and I want to drill 30 drill holes in that area, and they give you a permit to drill 30 drill holes where you would like, as long as you rehabilitate them the appropriate way, it's all fine. So if you change the location of your drill site, you've got to re-permit. and that can take time. The other things that have impacted us, but in terms of our drilling, are COVID related. So I mentioned about the drilling. The assaying as well is taking time. My understanding is the assay labs are operating at about 80% capacity. So it means that there's a much longer build up and delay in terms of getting the assays, which slows your decision making down a little bit. But realistically, I mean, you know, we picked up drum on the 30th of September last year. We're drilling it in January. So, you know, 3 months later, after putting together, you know, modeling 400 drill holes, doing a little bit of surface work, familiarizing ourselves, 3 months. So haven't really been too many delays in terms of our program.
Thanks, Scott. Just one more here. How's the relationship going with Kennecott at Frisco, and where do you see that going in 2022?
Yeah, look, the relationship with Kennecott is a good relationship. We have regular meetings with them for updates. Obviously, they provide us with the information. The only comment I'll make is Kennecott's a big company. You know, they have a lot of projects that they explore. They also prioritize those projects a lot. You know, so Alderan being a small company, we would always like to see Kennecott moving faster with their exploration than they're doing, but they're obviously weighing up their portfolio as such, particularly as a global company as well. So the relationship is good. We're very pleased that Kennecott is continuing to explore. We're very pleased that they're focused on porphyry targets. So look, we're just anxious for them to get on with the job. You know, from an Alderan perspective, and certainly I was impressed with what I saw in terms of the mineralisation opportunities that exist there when I visited just pre-Christmas. So I think Frisco is a really interesting project, both from a Rio Tinto scale perspective, but also from an Alderan scale perspective.
Right, thanks, Scott. There are no further questions at this time. I'll now hand back to you, Scott, for closing remarks.
Well, look, thank you. Thanks everyone for joining the webinar. Look, we'll have good news flow coming over the next few months as our drilling continues at Drum. We will have, we do expect to get assay results a little bit faster than what we've had previously. Certainly we're initiating that process and trying to get that happening a little bit quicker. And I think things are starting to free up a little bit in terms of analysis. So yeah, look, we expect to have good news flow over the next couple of months with how we're going forward. I think with that news flow, obviously there'll be a lot more announcements coming out, and obviously I look forward to the next opportunity to give a webinar, which hopefully be a little bit shorter period between the next one and the previous one. So thanks very much for joining.